Krishan, Senior Research, Technical and Derivative Research at Angel One. Osho, very good afternoon and thank you so much for your time to ET now. 19,300, we couldn't defend that, and talking about the Bank Nifty index knocking the doors of 43,000 now. How do you see the index, because we are amidst the monthly options expiry as well for the next 2 days? Do you believe that there could be some recovery?
Good afternoon. Well, looking at the overall sell-off that we have witnessed in the second half particularly, so that has clearly shown that the sentiments remain very bearish in the market. Because in Nifty first, if we will be seeing the 19,400 zone, it was expected that 19,400 will be tested today. But once it breaches below 19,400, it did not give any chance or any kind of pullback that can be seen in the benchmark index. And from there onwards, it kept on going downwards towards 19,300 and even below that. So as of now, as the major technical levels has been breached, so we are expecting that the only the pit stop for the bears can be seen around 19,250, which has been a very strong support zone historically also once the market has turned around from the same zone. So once 19,250 could be acting just as a pit stop for the bears, but overall looking at the sentiments, we still expect that that is also going to get breached in the coming sessions. So 19,000 is something that we can see in the coming future, because already we have a holiday tomorrow. So we were not expecting that much of bullish bets by the day end, but the way market took on the lower end, we can definitely see a very strong sell-off in the coming period. And particularly if I'll be talking about Bank Nifty, then Bank Nifty was at a very critical zone. 43,600 was the zone that we were expecting that from here onwards, there can be make or break kind of a zone. And as the market has seen a very strong plunge from the zone of 43,500, and currently Bank Nifty is hovering around the zone of 200 SMA. So we are expecting that even the Bank Nifty is also on a very negative terrain as of now, and we can expect the pressure in the coming period as well.
Well, not so positive outlook coming in from Osho. Osho, good afternoon. This is Lisa on the other side. Well, as you mentioned that there might be some pressure going forward. So what is the strategy that one should adopt in this brutal market correction? Are you seeing any sell recommendation, any of your buy recommendations? Can you suggest, please?
See, overall, there is a very mixed bag of trades that can be seen for traders. It is a very positive market because they can attract a lot of selling and buying, both the opportunities. But as of now, the technical picks that I have discussed, or I am going to pitch out, is something that we are expecting that from here onwards, majority of the development that has been seen on the stocks is negative front only. So the first counter which I have selected for the viewers is on the sell side. The first counter is trend. In trend, if we will be seeing today's formation, then it has seen a consolidation breakdown from the zone of 2000. So trend can be seen as a selling opportunity from here onwards. On the downside, 1910 to 1890 should be seen as the immediate target, and on the higher end, 2060 should be acting as the resistance. So one should keep a stop loss of 2060 for the immediate target of 1910 followed by 1890. The second counter is from the banking space. Axis Bank today has seen a very drastic plunge in itself, and we are expecting that in the coming period it can be seen testing the zone of 920 to 930 odd levels. So one can, even on the options front, can look for opportunities in November series 950 put option. So Axis Bank November series 950 put can be bought around 15 rupees, 16 rupees with a stop loss at 6 rupees for the upside target of nearly 30 to 32. So we are even expecting that there can be some kind of correction in the banking space also. The only space which is looking positive, or which is consolidating as of now, is insurance companies. So ICICI GI, if we will be talking, it has been consolidating near the zone of 1400 throughout the day. So one can look for buying opportunity in ICICI GI at current levels. 1390 to 1400 should be the zone to buy. And on the downside, 1370 should be kept as the stop loss. On the higher end, 1440 should be the expected target in the coming time period.
Okay, Osho, thank you so much for joining us today on ET Now and helping with your take on the markets and stock specific ideas.